Hello, out there in viewerland. Welcome to the broadcast. We are coming off of the heels of a pretty ridiculous week. I think I'm live. Let me know. I never know if the death wheel is done spinning, but we are coming off a pretty crazy week last week. I mean, who could have predicted what is happening and the things that happen in DeFi and just the whole market as a whole, just essentially crumbling. And I'm going to go through some of that and my thoughts on it and where we're headed and all that. And kind of tell you guys where I think we're headed, what to look out for now. I'm going to reevaluate a little bit about what I talk about in terms of like stable coins and talk to you a little bit about what I've talked about in the past and what my thoughts are with algos and stuff like that moving forward. So this should be a pretty good episode. I'm also, of course, going to do the overall market update. I've started to look at Bitcoin, Ethereum, the Ethereum Bitcoin charts, so we can understand where the alts are headed. And I kind of look at the overall market as well. So the Dow Jones, the NASDAQ, and the US dollar index to see where we're at, where we're headed, and ultimately what's going on. So without further ado, what I'm going to do is share this to my group. If you're interested in the group, we just, like I say in every episode, it's a group to where we help people understand how to navigate the crypto and DeFi markets. It's not financial advice, but it is a place to where I teach people sort of how to think. And I think that's one of the most important pieces to not getting wrecked in this game, because you have to be able to think and not be emotionally driven or emotionally charged. Because I think if you end up being emotionally driven and emotionally charged, it forces you to make not so logical decisions. A good book to really understand the emotions and logic and non-logic behind emotions is The Elephant and the Rider. Because when we're in times of crisis, typically humans think in what we call the elephant. And the elephant is the side of the brain that reacts emotionally. The elephant is the side of the brain that says, do this right now, and then regrets it later. Then when it regrets it later, that's when the rider steps in. And the rider is the side of the brain that basically says, wait, what are we doing? It's the logical side. And so we have to learn how to turn the logical side on when we're doing this kind of stuff, so we don't get wrecked by only thinking emotionally. So sharing this link. Cool. So let's get into this. Basically, I kind of want to go over the overall market first, then we'll get into all the craziness that has happened. So when we look at the market right now, we had a fairly decent rally in the beginning of the week. And then basically what happens every time is, let's check out the actual chart, close this one down. But basically what kind of happens is we have a rally up to this point, which was a point of resistance throughout the weekend. Weekend ends, institutions start trading, dump on retail, and it goes back down and it tests this trend line. Notice how many times it's tested this. We'll go over this in a second, but it's retail on the weekends, institution dump on retail. And it'll just repeat over and over and over again until we fall through this line and we test down here. But we'll go through that in a second. So that's kind of how the weekend went. It wasn't a bad weekend, and it's getting people kind of excited. Interesting things to me right now, the top trending cryptocurrencies are Terra, Luna, legitimately one of the only coins to go down like 99% and then come back up like 4,000%. It was the craziest thing I've ever seen. And I mean, at the very bottom, I was like, oh, well, I bought some and essentially tripled, almost quadrupled my money overnight. So it was a crazy experience to go through all that. But looking at the market as a whole, we're not doing super great. We kind of been stuck in this like below. Let's go back and look at the Bitcoin chart. We kind of been stuck between like 31 and essentially like 29 lately. It's kind of where I think we're just going to get sandwiched there for a little bit until we break probably to the downside, unfortunately. But looking at the rest of the market, Tether, actually one of the strongest fiat-backed coins, someone moved a bunch of it to US dollar coin that was in the curve pool, and it pushed it off peg. And now Tether's kind of sitting slightly below peg. It's not a horrible thing, but you can kind of see where it depegged a little bit because of that whole issue with UST that essentially went into that death spiral. And there's a lot of theories and ideas behind what happened with UST and the whole algo stable collapse. But ultimately what happened in the end was they made the decision to let the protocol do what it does, print Luna until it gets UST back to peg. But what happened was billions, and I think we're up to almost a lot of Luna was printed, and it didn't bring UST to peg. So it kind of just continues to scramble until UST is at peg, which it's obviously still not. It might never get there. And we might have hundreds of millions of trillions of quadrillions of Luna in circulation, which is what drove Luna down to this death spiral price. And it was unfortunate to see and watch. And the other thing that I think that happened that was pretty big issue was Luna, the community voted on a couple of mechanisms to help, but it took too long. It took 7 days for the thing to go into play. And this whole thing transpired and collapsed within a couple of days. And so I think the idea of this community government is good. But one thing I've noticed in a lot of these projects is there's not really a good risk mitigation strategy. There's not really a good chaos plan. There's not a good plan of what happens. What is our nuclear option? What happens when this whole thing starts crumbling? What can we do? If we have a DAO, we have to organize a vote. We have to get people to agree. A lot of these things take time. And yes, we want decentralized ideas and options, but we also need solutions to be able to deal with crisis. One of the things that I think Luna didn't do very well was they went silent. You didn't hear from their CEO for days at a time when this whole thing was transpiring. And I think when you're in a time of crisis and when you're in a time where something is happening and something like this where people's money is at stake, being open, honest, and transparent and consistently available for communication is the mark of a really good leader. It's the mark of what takes something that's horrible and gets people to rally behind what's coming next. It gets people to rally behind the leader. And I think that's what's missing a lot in DeFi in general is communication. I think it's a huge problem. When something happens, people go silent. When people go silent, people panic. When people panic, it makes the situation worse. So it was an unfortunate incident, and a lot, I know so many people who were impacted by it because Anchor Protocol, UST was kind of like the play where a lot of people put their savings and sort of like safe or whatever. And turns out it wasn't really. So I think now from the viewpoint of stables, we have to look at it and say, if there is a mechanism where you have a Luna UST relationship in the coin and there's nothing else, it's probably going to be a scary scenario because now there's an open opportunity to exploit it because there's of what happened. And so now I think we have to analyze these coins and really recognize what is quote unquote safe. Nothing is safe out there. DeFi right now is a shit show, for lack of a better term. There's not really a lot of good places to go. There's a lot of good protocols, but there's a lot of people that are scared, and scared money tends to run away. And when scared money runs away, it causes like bank runs, and bank runs are where basically the thing goes straight down. And so when we look at this, we have to say, okay, what could possibly be somewhat safe? And this isn't financial advice, but it's like, okay, right now it's fiat backed coins, which is Tether and US dollar coin, when like Binance US dollar, and it's over collateralized coins, which are like DAI. These coins are backed by they're over collateralized. There's more debt that they have inside their system than there is the availability of coins. So it allows them to consistently collateralize and have the funds available to support this thing staying at peg. And you'll see DAI stays fairly well at peg, and it does really a good job at it. Obviously, Tether and US dollar coin stay pretty much at peg. This US dollar coin hasn't moved at all. Tether it fell a little bit, but it came back up. So those tend to be the ones that I'm playing in right now. I think the market's just so scared. You kind of have to be careful what you jump into. But then looking at the overall market, basically where we're at, and if you have questions, just feel free to drop them below and I'll go through and answer them. Really, we just collapsed. I think the whole Terra Luna ecosystem collapsing caused a lot of cascading problems in the market. I think Bitcoin went down at the same time. So that caused those cascading problems. It was just a thing after a thing after a thing. When it rains, it pours, and it poured because Bitcoin went down, Avalanche. I mean, 6 months ago, if you would have asked someone for a $33 Avalanche, they probably would have murdered somebody to get it. Now it's here and people are a little bit afraid. Obviously, my philosophy is when people are afraid and running away, that's when I step in and start actually making plays. And one thing that I ultimately was able to do was move a lot of my stables into where Coinbase and stuff like that. So I can start DCAing into the market. I can DCA into Bitcoin and Ether right now because I think we're going to be here and then we're going to go down to like 21 and then progressively go back up. There's a lot of time right now, in my opinion, to DCA into these to really capitalize on the next phase of the bull run, or the next bull run, if you will, because I think right now we are fairly close to bottom, maybe bottom somewhere around 21.9. And so if I can start DCAing in now, and I can DCA in once a week all the way down, once a week all the way up, I set myself in a really good place. And then I'll stop DCAing somewhere around like 40K, which means I got this great V pattern of input that I got in the market, and then I can ride it and then get out at some point. But for me right now is the opportunity to make sort of life-changing money on what happens in the future, because everybody's running away scared. I think we're fairly close to the bottom. I don't think we're quite there yet. So I think we're in a really good position to capitalize on this. Again, not financial advice, but just kind of what I think and say. Polygon was just chosen to be I just turned off my video. Polygon was just chosen to be the NFT solution for, I believe, Facebook and Instagram and their family of apps. So that's pretty big. And I think what we're going to come into next are the Ethereum 2 is going to come out. And then what's going to happen is I think layer 2s like Polygon and layer 0s are going to be the next big thing. So that's going to be the next big thing to look at. So you're going to look at like the next phase being obviously ETH2 will launch ETH. Polkadot tends to be a layer 0. So you'll see the era of Polkadot. I think you'll see the era of Polygon even bigger than it is now because they're ultimately like the biggest layer 2. We're going to see Arbitrum. You're going to see Optimism. We're going to see a lot of those kind of pump up. We saw Decentraland actually was up like 42% in a day. So they're doing fairly well. In my opinion, I think what's going to happen, a lot of these gaming tokens is as we go further and further into the bear, money's going to evaporate. And then when money evaporates, these projects are going to fail because they don't even have a working product. Half of these gaming tokens don't even have a game. It's just hopes and dreams. And I know right now, if I log on to Decentraland, I can play the actual game. I can literally get in there and play the game. So they have an actual product that's functioning, that's working, that's not an alpha, that's not like some early release. It's a literal thing that's available. So I know, in my opinion, if there's an actual game available, if there's an actual product, that's what's going to survive. Because in a bear market, a lot of these things will fall apart and fail. And that's kind of like where I'm at with the market. UST still $1 billion market cap with only at 12 cents. And their philosophy is sort of to block or to fork the blockchain, which means to copy it, create something new. So we'll kind of see how that goes. But let's take a look at see if we have any questions, and then I'll go into what the actual market looks like and where I think we are headed next. Remember, if you have any questions, just ask those below. And if you are watching this and you like what I'm putting out, just make sure you like this channel and subscribe, or like this broadcast and subscribe to the channel. So when we look at where we're at right now, I should have organized this thing, but when we look at where we're at now, let's go to the daily chart for the moment. But this is what I was talking about just a second ago. So we had this nice little pump from May 13th, May 14th, May 15th, and then May 16th, we straight dumped down. And I think, let me check. May 13th was Friday, which coincides with what I'm kind of paying attention to. So this was Friday. So Friday we get pushed all the way down, and then retail thinks we're at the bottom. So retail on the weekends, because professional traders and funds and institutions don't trade on the weekends, we pump up, and then the Sunday bells open up because futures open on Sunday evening and traders getting ready for the Asian session start, dump straight back on retail. You raise all of the gains that they previously worked on. And so that's kind of what the name of the game. So now we're probably going to keep dumping until we may get a little relief rally on like Wednesday to trick the retail back up, and then we'll come back up, then we'll dump even farther. Eventually, if we keep touching this line, it's not going to hold at some point, because if you look at it, we've touched one, we went below it and wicked. So that's basically touched twice. We touched the third time. We're kind of touching we touched a fourth time, fairly close. So if this keeps happening, eventually we're going to break through that line. And then what happens is, because there's not a ton of, there was finally a decent volume. I keep talking about the volume not being there, but we finally had, that was a big volume punch. We had a pretty decent volume right there, May 12th, which ultimately was that gigantic wick down here. So that was a pretty good capitulation zone. And in my opinion, that's going to be the first capitulation we had. So that's kind of the wick back up. This is here, institutions dumping on retail, coming back down. And then I think we'll kind of just wiggle here for a while, maybe till the end of May. And then I think what we're going to eventually do is we're probably going to fall below this, and we're probably going to come down and wick off of somewhere near this 21.8. And it could be we wick off of this, or it could be we wick somewhere down here and build this giant wick back up to here. Is something that could happen. Another scenario is we come down, we wick, we come back right here, we hold support here, and then we stabilize. And over the course of a few months, we drive back up. So I think that might be a scenario we're probably headed on. When I look at where we're at, we were in this channel like I was talking about previously, and then we fell through. We dumped straight through. Notice how when we did fall through, that was a colossal dump that led us to capitulating. So when we fall through this, should we fall through this, it's going to lead us to capitulate down there, because it's going to provide significant volume as we break through these zones. And then I think at that point, what's going to happen is we're going to take the course of a few months to kind of work back up and start testing and challenging and working ourselves and moving back into like a bull zone, just like we did. I mean, this was the COVID crash. We fell through the zone. We wicked straight through all the way down. We wicked way past it. And then we came back up just below it, and then it took us a few, 1, 2, 3, 4, 5, 6 weeks to get back up to this part of the logarithmic zone. So, and it was pretty choppy on the way up, as you can kind of see, but it was green all the way back up and it was red all the way down. So I think that might be a similar situation to where we're headed. And like I always say, I hope I'm wrong with this bearish sort of attitude. If it didn't go down, if it just started going up now, that would be amazing. I would be happy. And so I always want to be proven wrong in this kind of thing. It's not about being right. It's about making accurate prediction and probabilities associated with where the market's headed. And same thing here. Look at this. The 200-day moving average was a lot higher here, but we capitulated through. We fell through that one. We wicked off of this. Didn't really actually wick off of it, but we hit the 200-week moving average. We came back up, tested the zone, came back down, wicked off it again. And then over the course of, let's see, 1, 2, 3, 4, 5, 6, 7 weeks it took us to get back to this bull market support zone. So we might see a scenario like this, but typically this is, like I've said in the past videos, these are the scenarios that happen and that ultimately drive us to being able to have really big updrives in the future. So when you look here, the 200-week was much higher, but we came through the bull market support. We fell all the way through it, wicked past that 200-week, and then moved back up. So I think that's kind of where we're probably headed with Bitcoin. Like I said in my previous videos, one of the things that worried me in the past, and that apparently I was right in talking about, was, let me find, was this weekly cross. So when I said we fell through this weekly and we didn't curve back up and test it, we just kind of continued plummeting. I said that was going to lead us to a pretty big capitulation and a pretty big fall. And ultimately it did, because this is exactly what happened. We wicked straight through. So now we're in a position to where if this doesn't give us some green or some relief, we're going to continue to capitulate down, because we don't have, we're not building any sort of bullish points or bullish contingencies to where I could accurately say that there's some place to lead us to go up, because right now it's not looking that great. And even when we look at the monthly, the larger frame, we're going on 2 straight months of red. When you look at these, it was 1, 2, 3 months of red. When you look at this one, 1, 2, 3 months of red. We're working on 1, 2 months of red. And arguably, we haven't seen significant or real volume since this January spike. So like I said in the past too, this peak right here in April was probably the end of the bull run. So everybody who was FOMOing in on this second peak was expecting there to be another one. And that's probably why it did it. But looking at the volume and the trends here, I mean, we had our big volume peak in April 1st, and that was it. And then we've been in a downtrend ever since. We haven't actually seen any real upside that would indicate that we are moving into another phase. Like same thing right here. We had this December 1st, 2017 peak. And then over here, we tried again in August 1st, 2019. And that kind of, or July, I guess June 1st, 2019. And that kind of precipitated the next peak. So if we are in a zone like that, or if we're near let's see if we can even see the 2013 cycle. Or the 2013 cycle. Let's turn off these colors. There we go. So when we look at the 2013, it's even so hard to tell because it's so little now. But we had this peak here that was the real peak, November 1st, 2013, and then tried again in June, but it wasn't there, didn't have the volume. So we're kind of in that zone. I think we've been in a bear market for quite a while. I mean, you could argue that we've been in a bear market since last year. And so this November peak was just people expecting it to go up, and it didn't. That's kind of where Bitcoin's at. When I look at where ETH is at, or the ETH Bitcoin chart, let's take a look at that one. We'll close. So let's take a look at the ETH Bitcoin chart. Turn this off and start paying attention to where we're at here. Open this thing up. Let's just refresh this. And if there's any questions, as always, post them in the comments. Let me see if we've got anything going on. Oh, we got Ministry of Attraction. You seem bearish on Matic. Oh, no, I am not bearish on Matic. I like Matic a lot. I still actually hold quite a bit of Matic. And the way I'm kind of looking at Matic is I think it's the future. I think Ethereum, as Ethereum 2 comes out, what's going to happen next is we're going to see layer 2s. And layer 0s probably play a really big part. And that means Matic, and that means like Polkadot, and that means things like Arbitrum and Optimism are going to become big. And then we're going to start seeing like optimistic rollups that become really, really big and become the solution. So that's where we're headed. Things that are associated with layer 2 I think are going to be the future. And that's going to be like Matic and those sorts of coins. I think layer 1's were the play this year or this last year, and then layer 2s are going to come into play next. So now when we look at this, we're still stuck in this zone. We finally fell through. I remember we were holding here. Then when the whole Luna thing happened, we straight up fell through hard. We did wick off the bottom of this zone, or close to it at least. And now we're kind of trying to drive back up. I think we're going to, this doesn't even matter right now. We need Bitcoin to behave and stabilize, because if it doesn't, we're going to fall straight through. And we are going to go to the downside and break out of this thing we've been in since last year when the bull market ended, April 26, 2021, or somewhere around that time frame. We've been stuck in here for a long time, and I would prefer to see it break to the upside, but we might either see it just stay here and run out of room eventually down here, or we could see it break to the downside at this point. So it'll be quite interesting. We were holding pretty strong, and we fell straight through all the way to the bottom. And that's why we saw that brief rally where we saw altcoins kind of go crazy recently. And that kind of put us where we're at now, just in the middle here, just dependent really on Bitcoin and where it's headed. Let's take a look at ETH. ETH is sort of in the same position. ETH doesn't really have a lot of, I think it'll probably be great once ETH 2 comes out. That is a super bullish event. But if Bitcoin isn't behaving and it's still struggling along, ETH isn't going anywhere either. So ETH's coming up on 2 red candles, and its 200-week moving average is sitting at 1180. So that's kind of where we could expect ETH to probably end up. ETH's bull market area is somewhere between like 28.4 and 33.1. That's going to go way down if we start trending towards that. If Bitcoin goes down and wicks off its 200-week, Ethereum will as well. And so, I mean, in my opinion, 1100 is a life-changing opportunity to jump in on this thing. Imagine if ETH goes from 11 to 10K in the next bull run. Well, you just 10 times your investment. So that's why at this point, I'm in a position to start DCAing into it. If I can, once a week, if I can put in at 17, if I can put it in again at 14, put in again at 12, put in again at 1,000, then put it up again at 14, put up again at 17, buy up again till 2, and then stop buying somewhere around 26. Well, I just got really good zones to get into this thing. And imagine if ETH comes down and actually fulfills its prophecy of ending up somewhere up here. That's a pretty big gain. And when you look at where people and the interesting thing here to pay attention to is 200 week coincides with this top in 2018, which was 1,086. And so that's typically a good zone to expect where a bottom was, because the top in the previous cycle ends up being a really strong support area. So it's kind of where ETH is at. It doesn't really have a lot going for it until ETH 2 comes out, or if Bitcoin starts behaving. If Bitcoin behaves, ETH will go crazy, just like it always does, but it's all dependent on Bitcoin. So notice how we wicked off down here when Bitcoin went down, then we came up, retail gets dumped on, we're stuck here, we're going to go sideways, probably come back down as Bitcoin comes back down. Let's see if there's any questions. Let me know if there's anything else. Yeah, so then let's look at how the overall market looks like. So we've got the Dow. Turn this off, refresh this. It's got this weird bug where everything just stays like flat. So the Dow is getting just hammered. It's been getting hammered just like the rest of the market. So we had this, let's find out over here. So this was kind of a support zone that I had built out. And we peeled over. We're below the sort of 200 200-day moving average, which would be indicative of a bull market over here. We're coming close to the 200-week band or SMA, which is indicative of a sort of bearish trend in the stock markets. And so it appears that stocks, we're kind of hanging on by a thread here. But if we start tumbling towards here and we wick off here, that's kind of recessionary territory, and where we can say, okay, this is what happens. We wick way below it. And then over the course of 1, 2, 3, 4, 5, 6 months, we recover. So it could take us 6 months to recover. It could take us longer. But when we look at the big dips in the past, when we've gone to that zone, let's look at 2008. That was fun. 2008, we got crushed. Let me double check where we're at here. So 2008, when we got annihilated, we fell way below this 200-week moving average. And that was pretty bad. So we stayed up here, and then we kind of started wicking off of it again. Then we finally fell through it here in June 2nd, 2008. And then September, the whole market just tanked and went, it was bad news in this position. So then it was 1, 2, 3, 4, 5, 6, 7 months of down. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And then it was like almost 22 months of trying to get back out of this thing. That's how bad that one was, till we got to a point to where we were back up above this 200 week moving average. It's hard to tell because it crossed, but we were back up, and then we wicked off it and withstood it. And then once we withstood it in 2011, that's when we started on this big uptrend, when we got into this serious bull market. So every time you've seen it in the past, and then again over here, we had in this 2002 area. So what's going to happen here if we do go past this? If we have a big recessionary period like this in 2008, you've got quite a while of waiting and wishing it would come back up. And for me, like if the market goes like this and it continues to go down, I'm going to probably DCA into index funds the whole way and then drive myself right back up. I might jump into some like good companies that aren't considered like growth stocks, but for the most part, for me, it's a good opportunity to DCA in. Once we fall below this, I just kind of pick once a week, come back in, and then ride it back up, and then end up in a better position. So sometimes I think it's good to look at this as an opportunity to win, to have a life-changing opportunity, rather than, oh, the world's going to chaos, which obviously this isn't a good thing, but you can play it out to at least be better than I guess it could be, or better than panicking. Are we going to play out that way? I don't know. It's just going to depend. The market's closed right now. If it opens again and it gets pummeled again, we're going to go probably closer to this. And then if it gets pummeled and falls through, we're going to go down. And then over the course of 6 or 7 months, we're going to climb back up. And so I think that's kind of where we're headed with the Dow. And then when we look at the NASDAQ, it's sort of in the same position. We're just like waiting. Let's look at the daily. There's not really. We are coming up on 2 straight months of downtrend. We've got decent support at 11,1205, but if we fall through that, then we're probably going to come to this 200-week moving average and fall through it, which might happen because of inflation and the Fed raising rates. I think we're playing a game to where we're going to enter into this recessionary period. How long it lasts, I don't know. I can't tell you, but I can tell you that if we fall through it, it's going to be several months to come down and come back up. If it doesn't end up being a quick wick, which it might be, it probably won't be in terms of where we're headed. And then last thing we want to look at is the sort of where the dollar's at. Is there anyone? Sorry, I meant bullish. My bad. I was like, man, did I come across bearish on Matic? No, I think Matic's great, and so I'm still jumping into that. It's one of my favorite picks. I know the network's got a lot of growing to do and in a lot of places, but I think layer 2s are the future and layer 0s. And as we get into optimistic rollups, I think that's going to replace the narrative of the layer 1 that we have right now. So the dollar has been in this trend since like 2014. We broke out. The dollar is crushing it. It went almost like parabolic in April. In June, we're still going up. It still looks pretty good. It's at 104. The dollar hasn't. Let's see. the dollar hasn't had a breakout like this in quite a while. As you can see, the overall trend of the dollar, if you drew a trend line, would be like down. But it seems like people are flocking to it. So I think we're in a position to watch the dollar start to peak out. And as the dollar starts to peak out, that would be indicative of crypto starting to move back up. But for now, we've got multiple straight green candles. When they start getting beefy like this, I think we're getting close to a zone to where we might see a peak or some sort of pinnacle on it, which it's interesting right now because as the dollar goes up and as credit gets more expensive, it could even put us into a credit crunch. So this is something to watch and a narrative to play out. And when people say the dollar is trash and weak, I look at this chart and I say, well, maybe it's not, because according to the dollar currency index associated with any other currency, the dollar is fairly strong. The dollar is where people are running to stay safe right now. So last thing I kind of want to look at is DeFi and where DeFi is headed. So when we have DeFi, not too big of a change over 24 hours, but since April 4th, DeFi has taken a huge hit. Look at Luna. We lost billions off the market. So we've gone from 231 billion locked in down to 110 billion. That's a pretty significant decline. We already had a little bit of a decline since November 2021 when we were on this sort of bull spike. And now we're seeing it come straight down, which is another indication of a big bear market, which in DeFi, you'll start to see protocols that are built basically on hopes and dreams collapse. And you'll see the ones that are built on like real business and have treasuries and are capable of surviving will still be here, which it will be interesting to see it play out. You're going to start seeing chains die out, chains not functioning anymore, just get abandoned. Right now, it's just literally across the board, everything's getting hammered. But so far we've got, obviously Ethereum that's been cut in like half. 1 month change minus 40%, BNB minus 35%, Avalanche minus 49%. Avalanche got hit pretty hard because it had Anchor protocol on its network. So when people ran out of AVAX Anchor, they lost a lot of value on that. Solana's down, Tron's up a little bit because they released their new stablecoin. They're going to be a target, same way as UST. So they've been building reserves. They deployed $2 billion or something to protect it. So kind of see where that goes. Polygon, nothing looks good right now. Phantom's down. As much as I like Phantom, it seems like people are just like money is leaving the network fast, and it's because it's smaller. It only has less than $2 billion locked in it. It's not up here like BNB and AVAX or Solana even. Now, well, Tron now has actually made incredible gains. So I think it's struggling to keep people on the network. I'm starting to see a lot of their developers like Terra moved on to Optimism. Beats is working with Balancer to launch on Optimism. I think it was Optimism or Arbitrum. I can't remember, but I think those are going to be the future plays. I think Phantom is a great network. I think the problem with Phantom is just it's been a tough narrative for Phantom to play. And I think a lot of protocols are looking at branching out. And there's a lot of really good protocols and developers on there. I mean, look at how many is an active community. So I think it'll be interesting how many stay and how many move into places like Arbitrum and Optimism. And kind of as we look at the DeFi landscape, there's just not really a lot good going on. I think Near is actually a really good pick. I think it's super undervalued right now, even though its total market cap to total lock value ratio is pretty high. There's only 7 protocols on it. I think that one will become up and coming and sort of launch. I think Optimism is going to be fairly big. Harmony probably might die just because DeFi Kingdoms moved to Avalanche and now they have Harmony and Avalanche, but people would rather be on Avalanche. So it seems like that'll be the sort of the death of that blockchain. Who knows though, maybe it'll come back. Luna down 99%. Unfortunately, a lot of horrible things in that one. Cardano, the mysterious platform that I'm still not sure how to use. it's interesting. And everything else is just kind of getting hammered. I think Moonbeam will be a good play. Metis is going to be a really good play. Other than that, it's just kind of a hurry up and wait game. Stay safe out there. I think if you're in DeFi right now, the plays for me, not financial advice, are staying in US dollar coin, US dollar tether, and DAI as kind of my main plays right now, and just pulling from that and DCAing into the regular market to be prepared for the next bull run so I can watch it launch. Anyway, that's all I've got to say. Let's see what questions we got. Near will be big in the near future. Ha 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 ha. Near is going to be nearly bullish. Ha. Oh, Sammy's the best. You want to come on here and do comedy hour with me? You're welcome to jump on board. We'll tell jokes. It'll be great. You can like slap me around if you want. That'll be good. Live slaps, I heard, are really popular. But anyway, that's kind of all I've got to say for today. If y'all liked what I'm talking about, if you got value out of this, just give me a hashtag value down below. If you like the broadcast, make sure you like it and subscribe to the channel and share it with someone who might benefit from this. My goal here is to be objective in what I'm talking about and to not appear too overly bullish or too overly bearish. I just want to tell it like it is in the market, where I think it's headed, and not try to influence people's decisions in being overly or trying to be a shill boy. For lack of a better term. So I'm here to show you where it's headed, what I'm doing in DeFi, why I'm doing it, and ultimately teach everyone how to think. That's it. That's all I've got to say. If you have any questions, post them down below and I will answer those questions. But I will talk to you all